if you look at the level of panic fear in the market right now, it is really high. From my perspective, you sort of have to ask yourself, has anything fundamentally changed about the Bitcoin story? And I think nothing has fundamentally changed about the Bitcoin story. Institutions are still buying, governments are still looking at it, Michael Saylor is still aping into it. Those are the long-term drivers, but the short-term news is bad. It's a short-term news bad, long-term news good. And when you have that setup, the short-term news can win for a while. And I think that's what we're seeing in the market, at least on Bitcoin. Those numbers are just bigger than the supply. I think that's the easiest story, maybe the easiest investing setup that I've ever seen. I think it's the single best time in history to buy Bitcoin from a risk-adjusted return basis.
While Bitcoin seems to be stabilizing, altcoins have taken a massive hit. Hougan believes that the world is beginning to realize that the future of finance is not built on meme coins. The collapse of projects like Libra and Melania, coupled with their usage in illicit activities, has put immense pressure on the meme coin sector. The recent market downturn has primarily been driven by the unwinding of the carry trade. As profitability in this strategy has collapsed, hedge funds have exited, causing significant outflows. However, institutional investors continue to accumulate, and retail investors remain resilient. This suggests that the market's long-term foundation is still intact, with no signs of capitulation among long-term holders.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
It's been a rough few days. It really has been. Yeah, Bitcoin Street seems fine. Seems like it's bottoming out here. But in the altcoin space, it's just been brutal. I think the world is coming to realize, Scott, that the future of finance is not built on meme coins. And we're adjusting. What? Yeah, I'm telling you. I think that's what
you heard it here first, people. Libra will not be the global reserve currency.
Not going to be the global reserve currency. It's not going to be Melania. Yeah, I think that's the story here. It is brutal out there. I think we will find a bottom, but the pain could persist for a little bit. You have to think of ETF holders in really three buckets. There's hedge funds who are doing the carry trade. They're buying the ETF and then shorting the futures. There are institutional investors who are long only, and then there are retail investors who do a large amount of things. Based on what we can see from our internal flows, from our customer conversations, etc., this looks like it's that top third that's really coming out of the market. The size of the carry trade, the profitability of the carry trade has just collapsed over the last few weeks. And as a result, those people are exiting the market. These other two buckets, institutional is doing great. We're still seeing net flows there. Retail is doing just fine as best we can see, although it's hard to put your finger on that pulse. So I think they had it exactly right. This is the carry trade evaporating. That's notable. The fact that the carry is shrinking is notable. But that's what's driving the flows from my perspective. We haven't seen the long investors sort of give up on the market yet and capitulate. I don't think that will happen. I actually don't think that will happen, but I don't think it's happened yet if it is going to happen. And the oldest story in crypto is people thinking they've found a free money glitch and then that blowing up and us going into existential despair because the market pulls back 15% as that unwinds. We've seen it in multiple iterations. MicroStrategy was an example. The carry trade unwind is not quite blowing up, but it does disappear. And, I think there's general market negativity, right? And we'll see what happens tonight when NVIDIA reports earnings. But I think on the Bybit piece, I think the killer piece there was that Lazarus tried to launder the funds through Pump.Fund, because I think that spells really the sort of existential death of the meme coin craze. If you have Melania and you have Libra, and then you have it being used as a laundering facility, even in this permissive regulatory environment, people are not going to look favorably on North Korean hackers, finding a way to launder stolen ETH. That's not going to do well. So I think there's going to be real pressure on the meme coin space. I think that's why you've seen Solana pull back so much and sort of lead us down this path. And we have to be honest that outside of Bitcoin, the only real story that was sort of present and easily felt over the last 6 months that was positive was the meme coin story. It was injecting capital into the market. It was injecting energy into the market. And I think people are writing that effectively to zero right now. And as a result, we need another story outside of Bitcoin. I think those stories exist. I think you can see green shoots in DeFi. I think you can see green shoots in stablecoin growth, but they aren't as present and as vibrant as meme coins. And I think the trio of Melania, Libra, and Lazarus through Bybit, I think it just means that story is basically over. Of course, there'll be bumps, it'll come back, but I think people are writing it to zero the same way we wrote ICOs to zero in 2018, right? Yeah. Once those got crushed. I think that's what's happening now. You remember July, the Bitcoin market sort of ripped up to 72 and then fell back to about 55 in July. And we were all in existential panic. At the time, we were worried about the German government selling Bitcoin and the Mt. Gox distributions. I mean, these stories that just sound ridiculous to us. But we found our bottom there. We didn't fall back to 30 or 40, and we proceeded to rip up to 100K. If you look at the level of panic, fear in the market right now, it is really high. I think if we get decent earnings out of traditional stocks over the next few days, I think the bottom could be in. If Nvidia comes in and has a terrible quarter and says DeepSeek has killed its business and it's going to go back to video games only, then I think, it could be difficult on the downside. But Andre looks at a lot of statistical data. He thinks we're close to the bottom. I think that feels right. I'll take the over on 80, but we'll have to see. From my perspective, you sort of have to ask yourself, has anything fundamentally changed about the Bitcoin story? And I think nothing has fundamentally changed about the Bitcoin story. Institutions are still buying. Governments are still looking at it. Michael Saylor is still aping into it. Those are the long-term drivers, but the short-term news is bad. It's a short-term news bad, long-term news good. And when you have that setup, the short-term news can win for a while. And I think that's what we're seeing in the market, at least on Bitcoin. It's ridiculously bullish. We're going to look back at a year and going to laugh at the fact that we were worried at this particular moment. I mean, I think for Bitcoin specifically, the story is just so simple. The market producing 165,000 Bitcoin a year. ETFs are buying 500,000. Corporations are buying 300,000. Governments will probably buy something like 500,000 to 1 million over the next year or two. Those numbers are just bigger than the supply. I think that's the easiest story, maybe the easiest investing setup that I've ever seen. I think it's the single best time in history to buy Bitcoin from a risk-adjusted return basis. Outside of Bitcoin,
because it's not going to zero anymore. Yeah,
it's not going to zero. We've chopped the left tail. So much has to happen for my bullish thesis to not come in Bitcoin. It's hard for me to imagine.
Hougan stresses that investors should not overreact to short-term outflows as they are part of a natural cycle. Institutions are still involved, and sovereign wealth funds like Abu Dhabi are making massive acquisitions, positioning themselves for long-term gains. Another major factor influencing market sentiment is regulation. Hougan points out that regulatory pressures have eased, with agencies pulling back on actions against major firms like Coinbase and Uniswap. While this regulatory relief is positive, it does not mean the industry is free from scrutiny.
The other area that I just can't keep my eye off is DeFi. I look at stablecoin AUM at an all-time high, tokenized real-world assets at an all-time high, the relief to platforms like Uniswap from the SEC. I look at Jupiter throwing the fee switch, Uniswap, moving to its chain. The DeFi market has demonstrated its works, right? The technology works. Technology is incredible. The lending is incredible. The staking is incredible. The trading is incredible. But we've had two big problems. One is for regulatory reasons, it could only really exist in the crypto casino. It couldn't expand beyond that. And then two, for regulatory reasons, we had to have tokens that had no value, that were linked to governance. And when you combine those two, of course it was constrained. But if you look at things like the Jupiter fee switch and the amount of revenue they're now generating, or you look at things like Unichain and imagine how that tokenomics plays out, and look at stablecoins going to $1 trillion+, I just think that's a sector that is, is ready for an enormous bull market that people have forgotten about. But every fundamental statistic I look at suggests that it's it's rounded and coming right up the curve. So I'm spending some time thinking about that. The challenge for the sort of alt layer ones is that the fundamentals aren't going to catch up for a while, right? The things we're talking about in DeFi, real world assets, even stablecoins, that sort of 10x growth in those markets is maybe 12 months out or 24 months out, right? That's going to take a while to happen. And I worry a little bit about the psychology of the market as the meme coin boom sort of dies a complete death, which is what I expect over the next few months. So there could still be some pain there. I think that's probably a long-term opportunity. But look, I do make the analogy back to the regulators stomping on the neck of the ICO market, and that sent us into a crypto winter for a long period of time. I don't think that's the case here because I think the Bitcoin story is too strong and the DeFi story is too strong. But
I think it's going to wash itself out, to be honest. This is one of those self-regulatory mechanisms that's beautiful to crypto. I think people just get tired of it. It kind of just becomes it doesn't go away, but it becomes so much smaller that it's not the narrative.
I think that's right. But I do think the hangover for Solana and some of the hangover for some of the alt layer ones could continue for a while until we see those sort of real world assets, stablecoins, DeFi really perk up. But for me, that's just an opportunity, right? If I'm investing for the next 5 years, then I'm dollar cost averaging into the weakness and making sure I build my position during this short term sort of psychologically driven pullback. And this has been going on since the ETFs launched. Hedge funds, if you look at the 13F filing, Scott, you can see the top holders are Millennium and other hedge funds. Those aren't mostly long only people punting on Bitcoin going to $1 million. Those are people printing this carry trade often on a levered basis, and that can come in and out of the market. We have seen it decline in the past. If you look at historical periods where there have been significant outflows from Bitcoin, it's often that carry trade sort of unwinding, and it will be back. It's not gone forever. So there'll be a few, billion-dollar days where we'll be all excited about the inflows. If we're not worried about these outflows, we should equally not be excited about those inflows in the future. This is a trade that comes and goes over time. Everyone knowing it's them, that's the incredible fact. And you can't imagine that that's going to stand, right? I know we've seen, the SEC pull back from Coinbase. We've seen the SEC pull back from Uniswap. We're seeing real regulatory relief. We're seeing real legislative process, but that doesn't mean that anything goes. Right. And people aren't going to look favorably upon this because it is happening in plain daylight. And I do think there's going to be a negative second story here on this in 3 or 6 months when people take a hard look at this and try to tighten that up. And there are a lot of sort of Deribit options expiring at the end of the week. I think once we get clear of that, we'll probably see the bottoming cycle. I bet this weekend will be pretty good. But again, that fear number compared to the reality of the fundamentals is just sort of an incredible disparity to me. My good friend Avichal tweeted the other day that opportunity is the difference between fundamentals and perception. And as I look at the market right now, the perception is just through the floor. 20 on the fear and greed is absurd given what's happening in the market. We forgot that Abu Dhabi is buying, hundreds of millions of dollars.
500 million to their sovereign wealth fund in a clip. Yeah,
that is exactly right. So,
and they're not the only ones.
No, so I think we'll get there. I bet we're closer to the bottom than many people expect. This is an incredible reminder that what we're seeing is the birth of a new asset class, which happens like a couple times a century. And you're seeing the largest financial firms in the world moving into this space. You can see it in the people who participated in our round. You can see it in BlackRock going all in. Now we have Citadel. I'd remind people that a few years ago, we were in the middle of FTX and people were wondering if this thing would exist. And now really you have all the largest players in the market moving in. And I think it's just going to continue. This will have mostly really strong positive impacts on the space. We're going to see liquidity get better. We're going to see arbitrage come in. We're going to see spreads come in. If you've been a bucket shop hedge fund making your money on arbitrage, your days are probably numbered. But for the rest of us who are, going in and buying and selling major assets, particularly in large amounts, this is a strong net positive for my business. It's going to be helpful in terms of getting the execution and liquidity that we need.
For instance, illicit activities involving meme coins and platforms like Bybit have caught the attention of regulators. This could lead to further crackdowns, creating short-term volatility. However, Hougan remains optimistic that the industry is maturing, with major financial institutions integrating crypto into their operations. The disconnect between fundamentals and market sentiment presents a compelling investment opportunity. As Hougan's colleague puts it, opportunity is the difference between fundamentals and perception. With institutional buying ramping up and Bitcoin scarcity becoming more evident, he believes that today's fears will soon be forgotten. Please like and subscribe.